Well, for top business speaks in Nigeria, I have these headlines. Oil firms can spend 50% forex proceeds on financial obligations. That's coming from the CBN. And also, the Central Bank of Nigeria suspends charges on cash deposits. States, local governments to get 90% VAT revenue, and that's according to Tinubu's panel. Joining me to unpack these headlines is Johnson Chukwu, founder and managing director, Cowrie Assets Management Limited. Thank you, Mr. Chukwu, for joining me today.
Thank you for having me. Good day.
Good day to you too. Well, we saw the CBN issue a circular clarifying its cash pooling guideline. Now, how essential is this clarification, and how does it really differ from what it said in the first circular?
Okay, thank you for the second part of your question, which says, how does it differ from the first circular? For me, it's not really a clarification, it's a modification of the first circular. The first circular has said that international oil companies can repatriate 50% of their export proceeds or earnings from crude oil exports within the first, immediately, and then repatriate the balance 50% after 90 days. So in effect, the oil companies were supposed to provide liquidity, foreign exchange liquidity within the Nigerian economy for 90 days based on receipts of export earnings from crude oil sales. The new circular now says that the international oil companies can only repatriate 50% of their foreign exchange earnings and then spend the balance 50% within the economy, Nigerian economy, to meet financial obligations. That they can use the other 50% to pay petroleum profit tax, they can use it to pay VAT, they can use it to pay local contractors, they can use it to pay other government taxes, contribution to local content, Nigerian local content fund, and also the balance they will also have to sell to the local market. So that's why I said it's not an amendment, it's a complete modification of the original regulation. So this time around, the oil companies no longer have the leeway, the latitude to repatriate the balance of the 50% after 90 days. They are now compelled to spend it within the local market. And that's why it's completely a different policy.
Absolutely. So let me have your thought on this guideline. What do you make of it?
I looked at it, and I looked at it from multiple perspectives. The first thing is that the motivation is to retain 50% of export earnings from crude oil sales within the local market and improve foreign exchange liquidity in the local market. That's in the Nigeria's local foreign exchange market, and therefore help to stabilize the local currency. That's obviously the intention of the central bank. But the corollary to that, or the unintended consequence, is that you're going to compel international companies who have expenditures above 50% of their foreign exchange earnings to now default in those expenditures, or to now borrow internationally to meet those expenditures. So they are going to begin to pile up international debt internationally or from their parent companies. And somehow you have to make allowance for them to pay those debts. So if the cost of its operation by an IOC is more than 50% imported, that is input materials, quality labor, and all those things, it's more than 50% of the amount of their proceeds, then it simply means that the 50% you have allowed them to repatriate won't be enough to meet their obligations. So there's a default possibilities. And the larger implication of this is that you are going to disincentivize international companies to bring in money into the economy and go into production, go into exploration. Because if there's no latitude for them to repatriate based on proceeds from sales, they will not have any motivation to raise money internationally and bring it locally to improve on our crude production. So that's what we have to bear in mind, that this, in as much as we intend to increase liquidity in the local foreign exchange market, the unintended consequence that we're going to constrain the foreign oil companies from raising money from outside the country to invest in exploration and production.
All right.
And if that happens, then it simply means in the short to medium term, we're going to see a further decline in production, or at the minimum, we will achieve our intention to increase production.
I hope that will be, sorted. I just hope there will be that sort of maybe stakeholder conversation around that, and that will be sorted. But moving away from that, the Nigerian banking sector is laden with several levels of charges, from charges on cash deposits, stamp duty, to even cybersecurity levy. Now, how does this promote financial inclusion, or is this in line with international best practices?
Well, any cost that is imposed on a transaction discourages that transaction. Any cost that is imposed on an intended change in cultural behavior will rather deter that change in cultural behavior. Nigerians had a culture of doing their transactions with cash. And then the central bank, in its wisdom, a couple of years back, came up with to disincentivize that cultural attitude of spending cash instead of using banking system as medium of payment. And then they introduced, after some periods of persuasion, they introduced charges or penalties for cash withdrawals and lodgements above certain threshold. But what they even did, they staggered that implementation of those penalties over a period of time based on starting with some cities that had high cash turnover activities to discourage cash activities in those cities. Eventually it became national. And now we have suspended that. What we have suspended that, we in effect saying that we don't mind if you bring cash into the system. And the benefit of the cashless policy, which the central bank had implemented over years, is that one, it discourages this illicit financial transactions, because those who are involved in it won't be able to bring the money into the system. Or when they want to bring the system, it will be flagged, and they will also pay penalty as cash handling charge. But beyond that, it encouraged the quick adoption of the cashless policy. And that helped reduce some level of crime in the country, including robberies that come to the people's homes to ask you where is the cash you kept in the house. I'm sure you can agree with me that it's very rare now for armed robbers to come to individual home because they know they won't find cash.
All right.
So reversing that and suspending that simply means that the government was saying, look, you can go back to that attitude. And the government suspended it and said, look, we're going to give it the suspension up to June this year, and they have now extended it to September. So I don't know their motivation for that, but I cannot tell you that it's reversing the intended drive to ensure we have improved financial inclusion, and then we have more effectiveness in the transmission of monetary policies, and that we discourage people from keeping cash at home, and they said and encouraging armed robbers that come to steal those things at home.
Okay, let's do this final one. We have these two proposals from the Presidential Fiscal Policy and Tax Reforms Committee, and then we've had the chairman say, sort of bring some form of clarification. The first one talks about how that he wants the federal government share to be reduced to 10%. I mean, that needs no clarification. It's already clarified. But for the second proposal, the chairman of the committee has said he was quoted out of context. In a series of tweets, he highlighted, and I quote, Nigeria's VAT system places a huge burden on businesses as they are not allowed to claim the input VAT incurred on services and assets. Some items which constitute basic consumptions, which include food, education, and healthcare, are liable to VAT rather than being exempt or zero rated. End of quote. And then after giving this, he then advocated the introduction of full input VAT credit for businesses, removal of VAT on certain basic consumption items, and the harmonization of consumption taxes into a single VAT. How effective do you think these measures would be in reducing the burden on businesses, protecting the poor, and probably also promoting non-oil exports? If we can have that tweet up there, that will sort of also help us, because we have the tweet from the chairman, Taiwo Oyedele, where he was trying to clarify some of those things. But let me get your thoughts on that.
I think there are two things that are very critical here. One is harmonizing the VAT with consumption tax. If you come to a state like Lagos, you have consumption tax, you also have VAT. People that use hospitality facilities like hotels pay consumption tax in addition to VAT. So this is the amount of double taxation. Harmonizing that will help people know what they're paying. Because if you go to some states, the states have different tax rates for consumption tax rates. So you don't even know what you're going to pay. If we harmonize that, even if it entails increasing the value added tax to 10%, and then allocating 90% with local governments and states where the burden of consumption actually resides with. I don't have any problem with that. But in terms of what are the implications of that, this on growing the economy, the small scale enterprises and all the rest, remember that VAT is a consumption tax. And it then means that if the tax burden is high, it adds to the cost of the item you consume. So what that means is that you are going to pay more because of the VAT. So if it is high, and because Nigerians are suffering from major depreciation in their net income and their effective take-home pay, so it will reduce consumption. If it reduces consumption, then it will reduce demand for goods and services. A reduction in goods and services will lead to a slowdown in economic activities and possibly a slowdown in employment, a reduction in employment level. So these are the multiplier impact of policies. But having said that, I think what the government wants to do, which is, I said, the critical thing, that we harmonize the VAT so that there's some level of certainty, because one of the requirements of the tax is must be certain. The payer who wants to pay that tax must know how much it's going to pay. So, and for consumption tax, you can actually decide, look, I don't want to incur this tax, so I would not consume this. But back to the basic issues on what should be vatable. We talked about the high level of wealth in the country. Most Nigerians can afford some basic needs. Food items should not be vatable. Medical facilities should not be vatable. Educational facilities should not be vatable. The key thing is that you want to tax those things, those consumption you want to discourage, and not tax those consumption you want to encourage. If you want people to eat well and live well, you cannot tax basic food items. You cannot tax medical services. You cannot tax health, other health services, and you can also not tax educational services. That way, if you exempt them from tax, you allow people that are already at the rung of the ladder to manage the little they have to live decent lives.
All right, thank you so much, Johnson Chukwu, the MD, Cowrie Assets Management Limited. Thank you so much for sharing your thoughts with us.
My pleasure.